All right, welcome to Daily Rates Live with the Mortgage Calculator. We'll get started here in just a moment. Let us go live on all the different platforms here. We appreciate those tuning in nice and early. Happy Friday, everyone. Holiday weekend. And it looks like we're live on all the different platforms, so we'll go ahead and get it started here. We'll take the chat off the screen for now, but keep dropping comments there in the chat. You can drop any questions you have in the chat as well. All right, so welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president Nick Hershey and our sales manager Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every morning at 11 a.m. Eastern on this show every weekday is go through our live rates, and then we do a deep dive into a different loan type. And tonight's loan type, or this morning's loan type, is going to be mixed use properties. So something we come across a lot here at the Mortgage Calculator because we specialize in non-QM and working with investors. So we'll go through that here shortly. But before we do that, we'll do what we do every morning, which is pull up our live rates. So Nick, if you're ready, let's go ahead and pull up today's pricing and see what it's looking like.
All right. So before I pull up the pricing, we're going to compare all of the different programs for today. It is May 24th, just after 11 a.m. Eastern. So all of our standard programs have their initial rates here. We're going to set up a scenario with a $500,000 purchase price, $400,000 loan amount. That corresponds to 80% loan to value, 20% down payment. And we'll use a 760 estimated FICO credit score and an estimated 40% DTI, debt to income ratio. And for our DSCR loans, we'll use a value of 1.5, which we'll explain here in a minute. If you'd like a full breakdown of all the itemized fees that go into the APR, please get with one of our team members. We have over 300 loan officers to help you out. So let's go ahead and check out the live rates for today. All right, so typically first up is our conventional option. That's typically the first option for most borrowers. So 30-year fixed conventional primary today comes in at 6.625, final APR is 6.967. So pretty much the same as yesterday. Now, if for any reason our customer doesn't qualify for a conventional option, the next option we want to compare is an FHA. FHA allows a little more leniency on credit issues, as well as a much higher debt to income ratio. But we'll keep everything identical, as I mentioned, for the scenario. So we're comparing across the programs. So rates for the same scenario on FHA come in at 5.875 and a final APR of 6.841. So when we compare the APRs here across the program, FHA could be a touch cheaper if our customer qualifies for both. And if our customer needs to use FHA, definitely a great option. Now moving on to our VA option. So 30-year fixed VA is only for our eligible vets and active service members. If you are, definitely a great option. Rates today as low as 5.99. Final APR is 6.314. So notice the APR is definitely much lower than any of the other programs. That's why the VA program is the best. If our customers do qualify, definitely recommend to take advantage. And we'll scroll down a little bit here to our last agency government option here, which is the USDA option. That only works for properties in a USDA eligible area. So if you are looking in those areas, typically rural areas, and it is in the USDA area, definitely a great option. So rates for USDA programs come in at 6% today, final APR 6.758. So notice if our customer qualifies and the property qualifies, they'll typically be comparing to an FHA, which USDA is a touch cheaper when we factor in all of the fees, or conventional, which again, USDA is a touch cheaper. So if the property is in that area and our customer qualifies, definitely recommend to check out the USDA options. And that's it for our agency government. So if our customer doesn't qualify with any of those standard programs, many other banks or lenders have to deny that customer because they only have 4 options. That's where we love to present our 5,000 other options here. First up under our non-QM additional options is our alt doc primary 30-year fixed. And rates for that today come in as low as 6.999 and the final APR 7.344. So this would typically be a bank statement option or similar. We also have 1099, P&L, all kinds of different variations. But the best option today comes in at just under a half a point higher than conventional. So if our customer was thinking they could qualify conventional, but for some reason couldn't, we can present a alt doc option, and it's within a half a point. So great options here for our customers that need a little bit of extra help. And moving on to our investors. So the first option for an investment property is our alt doc non-QM option. So again, typically a bank statement or similar. Rates come in today as low as 7.5 for, again, probably a bank statement example. And the APR comes in at 7.793. So for investors that need to use alt doc for their investment properties, some great options here. And let's check out the other investor options. So there are no government programs, so no USDA, VA, or FHA for investment properties, but we do have our conventional option. So 30-year fixed conventional for an investment property comes in today at 7.5% rate. Final APR 7.855. So notice it's a touch more expensive than non-QM today. I believe the other day they were flip-flop, but just always keep an eyeball on those two versions. Definitely great options. But our favorite option and our preferred option is always going to be our DSCR option. It stands for debt service coverage ratio. These programs do not require any income or employment or debt to income ratio. We're simply using the estimated rental income from the appraisal to determine a DSCR value. The estimated rents can cover the expenses, aka the property will cash flow monthly. That's a ratio of 1 or higher, which is preferred. And for a demo today, I mentioned we're using a ratio of 1.5. That way we can see all the programs. So the first option here is our 3-year prepayment penalty option, which is standard. Rates come in at 7.374 today. Final APR 7.7, beating conventional. Absolutely amazing. Most investors will choose a DSCR program even when it's more expensive than conventional, but today we can beat it. Absolutely amazing. And to sweeten the deal, you can add a 5-year prepayment penalty for our investors willing to do that. It does improve the rates. So rates go down to as low as 7%. Final APR 7.329. So great option for our investors that want to take advantage, and it really beats conventional by a long shot there. And last option here for our standard DSCR is with no prepayment penalty. So if our investor doesn't want a prepayment penalty, we have options. It is just higher rates and costs. So rates as low as 7.875. Final APR comes in 8.244. Notice that's a touch higher than conventional here. So definitely recommend our investors take advantage of the prepayment penalty benefit and choose one of these options here at a much lower rate and cost. And a couple other options that we'll talk about here before we pass it on. 30-year fixed second mortgage for a primary home, very popular request. A lot of people don't want to touch their first mortgage and are looking for a HELOC, or this would be a HE loan, a fixed rate second mortgage. Popular requests these days. These are with alt docs such as bank statements, etc. Rates come in as low as 9.625. Final APR 10.081 for a cash out there for a second mortgage without touching the first. And another little bonus here, we have our 40-year DSCR option. So great option to compare for our investors looking to have a higher cash flow. So 40-year amortization would mean lower payment, therefore higher cash flow. So this option with a 3-year prepay comes in at 7.625. Final APR 7.929. So just a touch higher than conventional and the other DSCR options, but will improve our cash flow for our investors interested. So all kinds of options that we have here under DSCR, including our topic for today. Let me switch my screen up. Just going to be our mixed use option. So there are a few DSCR programs. We can't do it on our live demo where we're doing just a standard scenario. So just like yesterday, Jose is going to go into our specific examples where we can use these unique variations of our DSCR program. So Jose, first let's define which types of mixed use properties, because there is a short set of properties, but this is where we can really shine.
Absolutely. Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Yesterday, we went over our 5 to 8 unit, which is an amazing and fun product to originate. Mixed use is even more fun because of the great solutions that we can provide to investors, especially when we give them the rates for our hybrid mixed use DSCR program, which is what I like to call it. Why do I call it a hybrid? Because I'm going to tell you the difference between this program and your commercial mixed use programs out there. First difference here is that we require at least 50% of the space to be residential in nature. And then the commercial space are not just unlimited commercial. It has to be a clean business, no industrial manufacturing type businesses. But we do have restaurants now that can be allowed, as well as retail, professional offices, and a few more other commercial type endeavors. So as long as you're as long as you're at least 50% of residential space on it, we can do it. Now, where it really shines in this program is we're not going to ask you the zip code for this program. Like, oh, what's the zip code? And they immediately plug the zip code in and let you know, oh, I'm sorry, the property doesn't qualify because there's only however many people living there per square mile and just can't do it. No matter if it's a 1.8 DSCR, been rented out 100% for the last 3 years, all that kind of stuff, 800 credit, not going to matter on the pure commercial route. But with the options I'm going to be showing you today, unless otherwise noted by me during the presentation, there are going to be this type of option that is not going to care about the zip code. The only thing that will be a deal killer is if the appraisal comes back and states that the property is rural, right? If it's a rural property, the deal is dead as far as these options. We're not going to be able to do it. But other than that, we can go up to maximum 75% LTV on the purchases and 70% LTV on the cash out refi for this preferred rate mixed use DSCR hybrid option that we have. So let's go ahead and share our options here. The first one, best case scenario, top tier credit, 760 or above. All of these loans have a 5-year prepay. And you are looking at 10.499, almost at par, and you can buy that down all the way to 8.874. So look at all those different rate options and choices that we have for the borrower. So this is best case scenario, 760. So now we drop to a 740 to 759, same rate, just slightly more expensive, where the other one was almost at par at 0.025. This one charges you 0.150. So almost the same cost for your 740 to 759 borrower, still only 25% down. So for our 720 to 739 borrower, rate does go up a little bit. The other one, we were 10.499, almost at par. Here we are 10.624, almost at par. And you can buy that down all the way to 8.999. Don't forget that last 9 with our 720 to 739 borrower. So now we drop to 700 to 719, but the best news is 25% down or 75% LTV is still possible and still great rates. Because here we're looking at 10.999, almost at par, and you can buy that down all the way to 9.499. Very good options there for our 700 to 719 credit score borrower, still 75% LTV. So now we drop to 680 to 699, and unfortunately our LTV does drop to 70%. This option does require at least 30% down payment, but still good rates. We're at 10.874, almost at par with a cost of 0.15 points. And then we can buy that down to 9.249 at a cost of 3.4 points for our 680 to 699 credit score borrower, 30% down. So now we drop to 660 credit score, 660 to 679. That is the minimum credit score for this preferred hybrid option that we have. It does require 35% down, 65% LTV. rates are good, right? The rate drops since the LTV drops. Even though the credit score drops, we drop the risk on the file. So 10.499 is our lowest cost option at almost 0.9 points. And then we can buy that down all the way to 8.874. Very good options. So let me give you now some refi options. Now, for our preferred option, the one that I've been discussing, this DSCR hybrid option for the mixed use properties, 70% is the max LTV for cash out. So I'm giving you here our best case scenario with a premium credit tier borrower, 760 plus, and you're looking at 10.249 lowest cost option, and you can buy that down to 8.624. So now I'm going to give you a little bit of context. I'm going to show you the commercial mixed use option, one of the commercial mixed use options that we have, just so you can compare the rates. Now, this is also a DSCR option. Now here, I'm mixing it around a little bit. I'm going right to the heart of the matter here. This option allows down to a 650 credit score. So I'm showing you the 650 credit score option at a 75% LTV, right? You just noticed on the preferred option, we were at 660, right? And 660 on a purchase was 65%. We take that on a refi, cash out refi, it's probably going to be 60% or something like that. But in this case here, mixed use purchase of this commercial option at a 650 is 75%, which is pretty amazing. Obviously, rates are a little bit higher here. We're looking at, and I'm pricing this out at 1 point loan discount. So you're looking at 11.615 at a cost of 1 point. And then also, this is a brokered option, so there is a broker fee, additional expense to the borrower here, versus all the other options that I was discussing where we are the lender and we fund it, no broker fee on those. And then our last option here is our mixed use option for the preferred deal. And here, actually, this is not with a 760 credit. This is with the this is 760 credit with the preferred option, so that you can see that we can actually go, not the preferred option, excuse me, the commercial option. Sorry, too many options here. This is the commercial option, but this is so you can see that we can go up to 75% LTV on the cash out on the commercial option, whereas our maximum LTV on the preferred option, the hybrid option, is 70% on a cash out. This option goes to 75% on a cash out, all the way down to 650 credit score as well. So you saw 650 credit score, 75% LTV on a purchase, 650 credit score, 75% LTV on a cash out refi. And in this case, for our premium tier credit score borrower, 10.865 at a cost of 1 point is the option for 75% LTV as opposed to 70% LTV for a commercial option for a premium credit score borrower. So many options here for mixed use loans at the mortgage calculator. Looking forward to helping you structure your mixed use loans as well as your 5 to 8 and any other DSCR options that you may have out there.
Okay. Let's see here. It looks like we do have a couple of questions. We can go ahead and pull those up on the screen there. Let's see. First question is, do we offer ground up construction on mixed use properties?
Yes, there is ground up construction. Now that's a very selective subsection of lending. I will, yeah. So there's not going to be like every every fixed flip lender who that also offers ground up is probably not going to offer mixed use. Only going to be a few of them, the ones that really deal with more commercial type properties, but we do have ground up for mixed use. Got to have a lot of experience for that one, though.
All right. And the next question is 75% LTV is max financing.
For the preferred option that we showed you today, yes. For the option that goes to a lower credit score, yes. But there are true commercial options that will go to 80%, higher interest rates, tougher guidelines, and they're all going to check the zip code of the property and make sure that you're in a area that they want to lend in.
All right. Okay. I don't see any other questions, so I think we can wrap it up. Remember, we do this every weekday at 11 a.m. Eastern, where we go through the live rates and then do a deep dive into a different loan topic. We'll be back next week with some new topics. Monday is a holiday, so the next time we will see you all will be Tuesday, 11 a.m. Eastern, for the next episode of Daily Rates Live, the Mortgage Calculator.